Hello and welcome back to KD's Business Tips, and we're going to start a little series here on what is the best structure for your business. And in this first video, we're going to talk about sole proprietors. One of the very first things you would do when you're starting a business is determine, of course, what structure is best for you. And in this video series, we're going to break down some of these. So when we're looking at a structure, we should always consult with a professional. We've said that before. You should always consult with a professional to make sure you're choosing the right structure for your business. And there's a lot of factors to consider, especially when you're starting a business. And typically when you start a business, a lot of times it may be a sole proprietorship, especially if you're doing something small where you're the only person and you're just contracting or doing something specific. It will typically be a sole proprietorship. And when we look at a sole proprietorship and what it is, a sole proprietorship is really where you and the business are one and the same. There's no real separate distinction. It's not a separate entity. You are the sole proprietor. You are the business. You are one and the same. So therefore, there's no difference between the entity and you when it comes to a sole proprietor. And this is what we're talking about from a tax perspective. And this is reported on your personal income tax return. Let's quickly go over the advantages and disadvantages of a sole proprietor. First, the advantages is the simplest and least expensive form of structure that you can have. Very easy to create and get rid of. It's very simple. The owner retains absolute control. So if you're the sole proprietor, you retain absolute control over your business. And you can also, of course, deduct expenses from your income of your sole proprietorship, and because it's reported on your personal taxes, you're therefore deducting expenses off your personal income. So in a corporation or another business, you're deducting it against that business, but in a personal case of a sole proprietor, your business expenses are being deducted against your personal income because you're reporting the sole proprietorship on your personal taxes. Now, there are also disadvantages, of course, to it as well. We like the sole proprietor. It's simple to set up, simple to maintain, very inexpensive to maintain, to file the taxes and so forth. But on the disadvantage, we got all these nice advantages of simplicity and cost effectiveness. But on the other side, we have the disadvantages of we have unlimited liability. We have no protection from liability. We and the sole proprietor are one and the same. If we mess up in the sole proprietor, we're at fault. So that's a very important concept, and as well as you can't separate liability and taxation because you're one and the same, so that goes hand in hand. You also can't raise funds very easily through a sole proprietor. Try to raise funds, say, for my sole proprietor, can you give me money? Well, what are you doing? Borrowing money? You can't sell equity, you can't sell shares in the company, so of course that's a disadvantage. And upon death, of course, when you pass away, the company is done. So you can't, like a corporation or other types of entities, you might be able to have someone take over that business as a sole proprietor. Once you pass away, the sole proprietor is complete. So again, the most simple and inexpensive, but there are some risks, some advantages and disadvantages. If you have questions, we'd love to hear from you. Post in the comments below. Thanks for being a part of our business tips, and we'll see you in the next video.